These guys have to get liquidated. That double top that they bought delayed. So we could have already dipped down to 10K and been going back up. But instead, they bought a fake new high. They got everyone that's a breakout trader wrecked when they bought this slightly higher high of 6% from 65 to 69. And then it went down to 17,600.
Welcome. This is the Daily Crypto. The second quarter GDP has been released in the United States, reporting a negative 0.9%. This would mark a recession, since this is the second consecutive quarter that we have had negative GDP. How will cryptos perform during a recession? Are we going to recover quickly, or will it be a severe recession? Keep watching to find out as we answer these questions with the founder of Hex, Richard Hart. The technical definition of a recession is 2 consecutive quarters of GDP decline. Bitcoin has been on a short bounce, but Richard Hart has been very vocal and critical of Bitcoin, calling it a piece of trash garbage asset. On the other hand, he was calling for Bitcoin to fall by more than 80% to $10,000, and that in previous cycles, Bitcoin usually performs poorly after it has made a top, which Richard called correctly. What does he think of the flagship cryptocurrency?
6% higher high Jewish candle that was bought on leverage. So instead of what happened was the market participants didn't want to do the normal blow off top with the 85% dump. They believed in the super cycle. And so with leverage, Michael Saylor took on leverage, Three Arrows Capital took on leverage. All these lending companies like Celsius, they also took on leverage. People don't realize it, but loans are leverage. You're doing stuff with money that you don't really have. Right? Like you're just delaying the sell. And once the price drops low enough, you have to get liquidated. And then that's the real sell. So when you encumber your assets, that's the virtual sell. And when you get liquidated, that's the real sell. And so they bought a double top. It's the first time in Bitcoin's history it's ever done a double top. And now Michael Saylor's at a loss. Michael Saylor, the guy who everyone gave their money to, the opposite of why Bitcoin was invented, they gave their money to Michael Saylor, who maybe can buy Bitcoin with it, maybe not. It's really up to him. It's not like the Bitcoin Investment Trust where they have to buy Bitcoin with it. He can do whatever he wants with the money, I think. Check the docs. It's not a trust company. And by the way, his coin went down 90%. His MicroStrategy Inc. went down 90%. Coinbase's stock went down 90%. Hex, after a 95% dip, is still up 250,000% from January 5th of 2020.
He adds,
these guys have to get liquidated. That double top that they bought delayed. So we could have already dipped down to 10K and been going back up. But instead, they bought a fake new high. They got everyone that's a breakout trader wrecked when they bought this slightly higher high of 6% from 65 to 69. And then it went down to 17,600. And now Three Arrows Capital is liquidated. He's got more followers than me. He's bankrupt. This guy, Raul Paul, who was irresponsibly long Ethereum, his words, the largest trade of his life, all his options he bought expired worthless. I told him, ladies, liquors, and leverage is how you get wrecked. That's how smart people go broke. Ladies, liquor, and leverage. Michael Saylor took on leverage. He's down, I believe, 30% on his Bitcoin stack. The government of El Salvador is down. ARK Invest, down. Everybody's wrecked but me.
On the market action, Richard must have seen some market forces or macro forces that would push Bitcoin and other cryptos down eventually. Was Richard basing his analysis on that?
I've been in this market since 2011. My price calls are amazing. I make very, very few of them. And it's a lot easier to get it right when you're not getting chopped up by just noise. So zoom out, longer time frame stuff. When hasn't Bitcoin done an 85% drop? It always does. It always has. Why would it stop? Everyone thinks this time's different. Nope, this time's not different.
Well,
institutional money's here. Yeah, they all got wrecked. As a matter of fact, ARK Invest that bought Coinbase at 250 just dumped most of their holdings at 50 today or last night. So that lady got wrecked. Like I'm surrounded by wrecked fools everywhere that have more followers than me. It just drives me crazy.
As reported, second quarter GDP numbers just came in, and we are technically in a recession. No crypto has experienced a recession before because Bitcoin was invented after the Great Recession of 2008. How is Bitcoin going to perform now?
Bitcoin is directly correlated with the stock market. The stock market is inversely correlated with interest rates. As interest rates rise, stocks go down. As stocks go down, Bitcoin goes down. When Bitcoin goes down, most other cryptocurrencies go down as well. The first time Bitcoin dropped from 65K to 17.5, Hex went up 30x. The second time Bitcoin dropped, Hex went down with it. Now, I think that's because we have some other cyclical things that were going on, and it's just kind of bad timing that they aligned. Because you can't do a 30x when something else drops in price half. That's a 60x better performance.
Richard adds that as long as they are raising interest rates, stocks will go down. Consumer spending will also go down, especially on luxury goods. Richard points out that if the investment you have dumps 20%, and that all the stuff that you want to buy drops by 20%, then you can say you broke even. Plus, if the investment that you had went up by 20%, and all the stuff you want to buy went up by 20%, you also broke even. But according to Richard, what really matters is the ratio of what you are holding versus the stuff that you want to buy. He continues.
Crypto, and it drives me wild. They hide. Remember how I said figures don't lie, but liars figure? Here's this misleading garbage that I see from the media and the idiots in the cryptocurrency space constantly. They talk about the drops, okay? Bitcoin dropped 75, Ethereum dropped 85, Hex dropped 95. Cool, great. To any new person, that sounds like a terrible investment. But wait a second, how much are they up? Well, I don't know. When I was mining Bitcoin, they were 50 cents. When I bought Bitcoin, it was $30. Well, now they're $22,000. But what about that 85% drop? Well, you see, let's take a 90% drop. A 90% drop only cancels out a 10x. So if you go up 10x and drop 90%, you're back where you started. Well, Hex went up 10,000x. And so if it drops 90%, it only cancels out 10x. It did a 10,000x. Bitcoin did a 690,000x. Ethereum did a 14,000x. Actually, I think Bitcoin did a 69,000x. It only went up 690 million percent. So it went from, let's say, a penny to 69,000. So it'd be 69,000 times.
It all depends on when it was bought. Whoever purchased Hex this time last year would be down right now, won't they? Richard responds.
Sure.
Volatility is the price you pay for the best performing asset in history. If you have a very, very short time horizon, you can get wrecked in any speculative instrument. I mean, what? Amazon's down 20, 30, 40, 50%?
Yeah.
Is Amazon a scam? Amazon went down 95% in the year 2000. Is it a scam? No. Volatility is a function of the humans. The price volatility is not something you can program away. It's humans thinking something's worth more, and then they think it's worth less. It has nothing to do with the actual product. It has nothing to do with the coin. It's a function of human psychology.
On stocks, we have had a history of certain sectors in the stock market performing very well during a recession. For example, during the 2008 recession, discount stores did very well. Walmart was up by 20%. Can cryptos outperform the stock market in this recession?
Yeah, they can. You just have to get the right one. That's the trick with crypto, is if you bought Bitcoin, Bitcoin is now roughly the same price that it was 5 years ago. So you could have bought Bitcoin for $20,000 in 2017 at the end, which is basically 2018. Or you could buy it for 22K today, or a week ago, you could have bought it for 20K. So you waited 5 years for the same price. Same with gold. Gold's the same. Gold's cheaper now than it was 10 years ago. So with gold, you got wrecked. With Bitcoin, you got wrecked if you bought the previous tops on either of those things. But, if you look at a longer time horizon, you can't. Why would you care about an 85% dip and not look at it as an opportunity when these things go up thousands, hundreds, tens of X? So yes, Bitcoin has dropped 85% 3 or 4 or 5 times, but it went up 690 million percent.
Right.
And so people always leave out the how far up, even Dogecoin, right? Dogecoin is bad technology. It's just a meme. It was literally invented as a joke in an afternoon, literally. And you're still up massively compared to Bitcoin, even after it dropped 85%.
In that case, What is Richard Hart's forecast for the year in the macroeconomic landscape? Is it going to be a severe recession or a mild one? Are we going to recover quickly like we did in 2020?
I don't know. Those things I don't know.
Fair enough.
And I'm not sure those things are knowable. I think as far as prices go, they will eventually stop raising rates. When they do that, it's going to let all the risk on assets start going up. Crypto will go up the most.
Okay.
As long as you have a 30% discount on Grayscale Bitcoin, which holds 3% of all the Bitcoin, you are not going to get a bull market. And right now, the Grayscale discount is like 32 or 33%. So you can give Grayscale money for fake Bitcoin, but they really hold it. They really have it.
What do you mean
proven.
fake Bitcoin?
Well, it's encapsulated. You can't redeem it. So if Grayscale is a trust company that holds 3% of all the Bitcoin, they've got like 100 and I don't remember how many coins, but it's 3% of the total stack. Maybe it's like 270,000 coins or something. And they've got a trust company that holds them, and they charge like 2% override fee a year. So they make like $600 million a year net just sitting on everyone else's Bitcoin, which is a pretty good deal for them. And you can buy shares in their company that don't give you any right to the underlying Bitcoin.
Yeah.
But, you know, they really hold it.
Richard indicates.
If you're giving someone else your money, that's the opposite of why crypto was invented. Crypto was invented so that you hold your own keys and there's no middlemen and no counterparty risk. So as long as you can buy Grayscale, quote, Bitcoin shares in the Grayscale company that holds 3% of all Bitcoin for a 30% discount, and it usually trades at a 20% premium, money will go there. It won't go to spot. Spot will keep dropping. Yeah. And then you could literally see that deficit go lower than 30. It could go to minus 50. Like you could get Grayscale encapsulated fake Bitcoin for 50% off.
Thanks for watching this video. What do you think of Hart's predictions? Let us know what you think in the comments section below. Don't forget to like, share, and subscribe to our channel. See you on the next one. Bye for now.